So right away we start. Sure. So
Yes.
we have
Go
explained
ahead.
the chart of account. What's very important, we say it is the type. It can either be in the balance sheet, it can be the profit and loss. In the balance sheet, you need to
Yes.
know whether it is in the asset side or in the liability side. So you
Mm.
set up in the right way. No, that's as
Okay.
far as the chart of account. The other thing you need to know in accounting is the journal entries. Sorry,
Mm.
the journals, not journal entries. Journals are actually, in most companies, they will be payment modes.
Mm.
You can
Mm.
call them payment modes in most companies. They may be paying by M-Pesa, they are paying by bank. With all the banks, you can set them here, the journals.
Mm.
And
Mm.
if you are doing a POS or point of sale and they want the journals, make sure you
Mm.
just set them as cash. So most of the time, you set them as cash and they'll appear in the POS so that it is a tick or paste or whatever, it will appear in
Mm.
the cash.
Mm.
The other thing here which you need to know in the journals, kuna something here allowed us allowed I think it's not here what I was looking for. Okay, I think it is in another version. So another thing we need to know in accounting is taxes.
Mm.
Because when you are doing the basic setup for accounting, you need to set up the taxes for the company. So you just need
Mm.
to collect whether they are doing VAT, they are doing
Mm.
withholding. You set them
Mm.
up here, and you just put the
Mm.
percentage. And if it is percentage, most of the time it can be excluded in the price. So
Mm.
if it is included, you just make sure you check that included in the
Mm.
price. Yeah.
Mm.
So you just ask the client, or your prices inclusive of the VAT or exclusive. Then
Okay.
you make decision from it.
Mm.
Those are the basic setup. If I can remember all that. Mm, this thing about asset model, what it means is you can define the depreciation for an asset. You can say like for instance, motor vehicle depreciates at 1% for a period of 10 years. I want it to depreciate for a period of 10 years. After the 10
Mm.
years, I want to dispose that vehicle. So you can always
Mm.
create a model for the motor vehicle, a model for furniture, a model for all the other assets. And then when you are creating an asset, automatically you pick the model and
Mm.
create it instead
Right.
of doing everything from scratch. So basically, let's start with vendor bills. I'll
Mm.
just explain some few technicalities. So when you are creating an invoice, remember Odoo accounting starts from the invoicing part. Some people will ask you, when I do a purchase in the purchase place, do I affect the accounting part of it?
Mm.
No. In purchase, in sales, we are not affecting the accounting at that point. But immediately you
Mm.
do an invoice and confirm the invoice, then Odoo accounting begin to work. So when
Okay.
you are creating an invoice for the items, there are two accounts that are going to be affected. The first account is the customer, the supplier vendor account. In Odoo,
Mm.
it's called a creditors account, or it is
Mm.
called payable. Sorry, it's called payable account. It will be
Mm.
affected. And then two, the item you are selling is it may be an expense to the company or a product. We just group them as
Mm.
expenses. Like if I pick an
Mm.
item, you always see it comes automatically as expense here.
Mm.
So those are
Mm.
the two accounts that be affected when you are creating an invoice. The expense you are incurring, and then two,
Mm.
the customer who is being affected by that expense. So it is
Right.
payable and expense account. So what it means is that if the client has categories of items or
Mm.
groupings of items, you can still create accounts attached to the groups. So when you go to the item, we have a place to set up this account here.
Mm.
Just open. Go to accounting. This is where you set up the expense account. All the
Mm.
expenses, including whatever you are paying, whatever you are paying to buy this product, are posted in the expense account
Mm.
here.
Mm.
The same can
Mm.
be set up on the category here.
Okay. Mm.
So you have that expense account, which is affecting that one. So the same for when you are selling an item, you have the income account, which will be affected. So let's go back there. So once you save and you post, if you go to the chart of account, let me just open. What is this? Oh, I make it 0. Sorry, I need to make. If you make it 0, it does not give you the option to register payment. So I need to make it some value. Let's say 2,000. And then I post. So let's go to the chart of account and check that bill, what has happened. I'll duplicate it. I go to accounting, journal entries. Remove this one, miscellaneous. So I see all the journals. Now I'm looking for this bill. I think we can see it automatically. Bill that 2021 2000. It is this one. So we open it and see what has happened to that bill when we create an invoice. What am I doing? Journal entries. So there should be 2 entries. For this.
Then one was 0. It was posted as well.
0, yeah. But I am I getting going directly to the bill? Journal items. Okay, I think we can get the journal items from here. So you can see the items that the accounts that were affected. Account payable, the account that is attached to the stock. Remember where you are setting from the product master, and then also the account for tax is affected. So account payable is credited, which is true, because we are increasing suppliers. And then stock items, we are reducing in stock, which is the debited, because this is a supplier. And then taxes are debited, which is true. So when you are demonstrating to the supplier after doing an invoice, you just need to go to the journal entries and show them to the client to show them how the accounts have been affected. So most of them are accountants. They can really
Understand it.
understand it, the way it's moving. And if there's an issue, they will tell you, no, it should nafai post namna hii. And then we advise them, remember, this is an expense account. This is a creditor's account. A credit is because we are increasing creditors, they should be credited. But you just pick down whatever they are asking. It becomes like a challenging, and then you can research more, consult more from it. So that is as far as. Now let's register payment and see the same journal entries, how they have been affected. So we register the payment. So we select the bank we are using, or the payment mode. Let's say we pick even Halo Pesa or M-Pesa, TZ, for all the amount, and then validate. So it's shape paid. So let's go back to the journal 8. I think it's already here.
Question.
Yeah.
Question. This one will be accessible. The payment of bill will be accessible to accountants who do bill, yeah, and they not the purchase guys. So the purchase access does not give you the billing. Am I right? Billing go to
because if you go to access rights, use and access rights. You'll see we have access rights for accounting. So the one who can do the billing, that is confirm the invoice, is an accountant. Where is accounting here? So accountant will be able to post, but now the advisor can be able to register payment.
Advisor is the only one who can register payment.
Yeah, but depending on them, you can also do a setup. You just get up their requirements. We can do directly from the UI. These buttons you are seeing, post, register payment, we can attach to a particular group. It's not necessary that it is permanent, this group. For as long as you understand.
Where do you put it? I just wanted to know, where do you give different access to advisor, billing?
It's here. It's in, you go to users.
Mm-hmm.
Or you can type just users here, or you go to settings and then look for users and company users.
Mm-hmm.
Then select the user whom you want to set up, edit,
Mm-hmm.
then go to
Mm-hmm.
accounting. You see the
Yeah,
accessories.
I'm saying, is there any other access, and other different access than billing, accountant, and advisor? No. Yes. No.
You can do that one. If you go to groups, if you are in debug mode,
Mm. Debug mode.
uh,
Mm-hmm.
debug is one. That I think by 9 we should stop. So let's
Okay.
run very fast. So you go to groups. Now you look for that particular group. Let's say you're looking for advisor. You want to add
Mm-hmm.
more rights.
Mm-hmm.
You open it. So you just must understand the groups zenye unataka kuongeza. Kwa mfano
Mm-hmm.
nikisema namna hii, huyu mtu haoni purchases na nataka aone, or haoni inventory products na nataka aone products, nitakuja tu kwa products venye ziko, whatever venue you want them to access, just click on it, then open one item in that menu and then point on one field, utapata the table.
Mm.
just uh,
Okay.
just point on any here. Have I put on developer? Oh, I'm not in developer. So let me just see that debug. So you just open one menu, the menu, whatever the menu you want them to access, and
Mm.
then you just open it and then point on one field, utajua hiyo table inaitwa nani. So hii table
Mm.
inaitwa object is product dot template.
Mm.
You can see I pointed on it, that floating.
Yes. Yes. Yes.
Yeah,
Yes.
so product dot
Mm.
template is the object. So unakuja tu kwa settings, users and companies, groups, alafu
Mm.
search for advisor, alafu kuja hapa kwa access rights.
Access rights. Yes.
Unaweza
Okay.
add hiyo
Oh,
hiyo
okay.
table ya
Nimekuelewa.
products, yeah. So ikuja
Okay.
hapa
Clear. Clear.
sure, product dot
Clear.
template.
Mm.
Na tena unaweza tena fanya menus, maybe you don't want the advisors to access a particular menu in accounting.
Mm.
Utakuja
Mm.
tu hapa kwa
Mm.
menus, alafu angalia
Mm.
hiyo menu na we remove,
Okay. Okay.
or if unataka waone another menu una add that menu.
Oh, sawa.
Yeah,
Sawa. Sawa. Nimekupata. Sorry. Hiyo sehemu ilikuwa, kumbe ilikuwa mpaka uende debug mode. Okay.
yeah, sure.
Good. Mhm.
Where am I now? Is this that I'm doing the right one? It's now showing menus without any, no problem. So we done with the invoices, we done with the taxes, we done with now the customer invoice. We are doing the supplier invoice. For the customer invoice, the same thing should happen. Where is accounting? We go to customers, you do an invoice. So you create the invoice,
Mm.
and then the customer, you select the customer from the list,
Mm.
and then just know that for the customer is our data, so those are
Mm.
receivables,
Mm.
and then the product is revenue because it's bringing revenue to the company, so the account will be of type revenue. So
Sasa.
when I add the item here, I select the item, so that account product type sales is of type revenue.
Yes. Yeah.
You can even see that account, and see, you can see it is income.
Mm.
Yeah.
Mm.
So that's why if you
So.
selected this account na useme expense, it will bring the wrong posting in the trial balance or the accounting.
Sasa.
Yeah.
Sasa.
So let's save. So we are affecting two accounts here. The receivable account, which is debtors, and the income account, which is product sales. So let's post. After posting, that's when the accounting entries are affected. If you go to journal items, you see the accounts that are affected. Product sales, here, 1 shillings has been credited. Why? Because we are reducing product, we are selling them. and then account receivable has been debited. That's it. And
Okay.
then we also tax that is affected.
Okay.
Yeah. So when you register payment, you'll also see those accounts.
Product sale there is like a product. I mean, it's a product. Am I right?
Yeah, it's account attached to product, which is a revenue account.
Revenue. Yes, yes.
Yeah. So we are paid. If you go to journal entries again,
Mm.
you can see that account affected by the payment. Remove miscellaneous. See, the first one was invoices. The next one was the one for the bank. This one, like even the M-Pesa is there. You can see the accounts that are affected. One is account receivable. So what happens is when you are doing an invoice, the creditor's account has increased. So when you want to do a payment, you have to clear the creditor's account so the double entry rules can still maintain. So,
Yeah.
so how do you clear? You can see this point here we are crediting, the other point we are debiting, and then we are debiting bank. So it will clear the account receivable and then increase the bank, because we are increasing money in the bank, we have sold items.
So, sir.
Yeah. So that is as far as accounting and invoicing. So next is reconciliation. So in reconciliation, basically in Odoo, there are two ways of reconciling an invoice. The first one is direct reconciliation. You booking an invoice, register payment, the system will reconcile automatically. But now, if we are receiving bank statements from the bank and then they come, and then from that point you reconcile the invoices. Most of the system they do manually. They have Excel. They look for the invoice. They find the bank statement line that is matching that Excel, and then they say this is mark it as paid. That is their process of reconciliation. But in Odoo, it's different. So once you have the journal that is representing that bank account, you can automatically reconcile by importing the bank statement into the system. So what it means is this one. For this type of reconciliation, when you create an invoice, don't register payment. Just post and leave it. Yeah. So we are going to create a reconciliation. So basically, you can format the reconciliation in Excel and then import the bank statement into the system directly. We'll look at that later. I don't want us to go that, and then import. It will just populate it. But we are going to do it manually so that you can understand what happens. So basically, we are going to create for APC Bank Tanzania. We create a bank statement, a reconciliation transaction for it. So I would say Rico Bank June. This is which month? April. Bank Rico. Let's assume we have received a bank statement today. Bank Rico. We are reconciling for that bank. So I'll look at the bank statement. What is the starting balance? Let's say it started at 0. What is the ending balance on the bank statement? Let's say it is 1,000. Let me pick one invoice here. I create one invoice which I want to reconcile. So that is the invoice in accounting. Where are the icon, subcon? So I'm just going to create one invoice which I'm going to reconcile. So create that. Remember the previous ones have registered payment, so they are reconciled already. So I select a customer, different one, like Newtons. I add the item there, say 50 kg package. The amount, let me say, is 1,000 because I want to reconcile that 1,000. Most of the time it would be with VAT, but I just want to show it directly for you. So the one that will reconcile directly. So I will post, for the accountant will just post the invoices, don't register. For them, they just post, and don't register. So we want to go to reconcile. At the end of the month, they will receive the bank statement. They will need to reconcile it. How do they do that one? They will come here, April Bank Rico, they will create a reconciliation of that particular bank. Now they say the starting balance is 0, the ending balance is 1,000. Let's assume we just have one customer who has paid through the bank with 1,000 shillings. So I will add a line. The line is the bank statement line, whatever I'm extracting from the bank statement line. The label was the customer name, Newtons. The bank labeled him as Newtons Pay. They may have labeled it differently. The partner for the bank, who is the customer, was Newtons. And then the reference, their bank reference was APC slash whatever the reference that was on that statement, and the amount, let's say it was that 1,000 that he paid, 1,000. So we save. So you'll add all the bank statement line. This is just one line, but several customers have paid, suppliers have paid. If it is a supplier, unaweka negative 1,000. If it is a customer, unaweka positive 1,000 from the bank statement. So unaenda zote down there.
Repeat again. If it is a supplier,
unaweka negative 1,000.
Sawa.
Per customer unaweka 1,000. So you'll enter all the bank statement lines zote ziishi along here. Just add a line, add a line, add a line. But the essence is to have a template for importing into the system. We give you a template of the journal, which is the bank, the date, and then the line of items. You add all the line of items, and then you import in the system. They will populate here all of them, or you can add one by one. So once you have added, you have completed, you save, and then you just click reconcile. So you see what Odoo will do. Odoo will suggest for you ya kwamba hii 1,000 yenye umeingia ya bank statement ya Newton ina match na huyu payment ya vendor ya I think we picked a wrong Newton. There were 2 Newtons, ndio, because inafaa match na the same payment.
No problem. I got it. Yeah, I got it.
So I will pick another Newton here. Let me pick this. And then I want it to be direct so that we allow power. So partner is Newtons. Save. Reconcile. What is it saying this? That 1,000. Okay. So I don't know why it's saying this one, but it has to see that 1,000. So what you need to do, because it's like, for instance, this.
I got what you.
Yeah, sure. This customer paid 1,000, but he has an invoice in our system of 126.50. It's also a good example. So what the system will do is it will reconcile 126.50 and post a prepayment for the extra. So meaning huyu mteja akikuja anunue kitu ingine, kitambo tuko na pesa yake advance. Umenielewa? Yeah. So let's validate. We reconcile with this 1,000. Let's see, congrats, you are all done. Reconcile one transaction is done. Then I close the statement. Uko chini, sikusikii vizuri.
I'm saying right now is you showed this way that I have done the sales or the purchase or whatever, okay, and then later I created bank statement, okay.
Yes.
My question is, can I start to just create bank statement, okay, without reconciling, and then I do selling or I do purchasing, okay, and then later I decided to do reconcile? I think that should be okay.
Yeah, it should also be okay. You can do that one, it will still work. It will still work if you reconcile. So you can see that it is posted already and validated the entry for that payment.
I see.
So that's as far as bank reconciliation is concerned. What is very important with bank reconciliation is that we are importing bank statements and we are not registering payments. We leave the invoices are open, or we start with the bank reconciliation. Once you create the invoice, make sure it is open, don't pay it. So next we look at the asset management. This is also part of the accounting. So assets are here. So for asset management, we'll have the asset register. You can create the asset from there. Let's say laptop, the way they have suggested, is an asset. The cost, the original value is the cost of that asset. What you have to say, it is 10,000. acquisition date is the purchase date, and then automatically it will show that as at today, the depreciation value is the whole 10,000. And the book value, which is the selling value on the market, is still 10,000. So from here, the not depreciated value, you can decide to say, I don't want it to depreciate by 10,000. I want it this time to have already depreciated. Maybe it is a used as laptop. So you can value, the real value on the market is 10,000, but currently the value is 5,000. So you know, put up the depreciated value as 5,000, which is 10,000 minus 5,000. But we don't want to go into that. And then in the depreciation methods, we have two. One is linear, the other one is decreasing. Linear is like flat in interest management. It just takes, you say this asset is depreciating by 1,000 every year or every month. So what has happened is after 1 year it was 10,000. The next year it will be 9,000. I will sell it at 9,000. Another year I will sell it at 8,000, 7,000. When the 10 years are over, I will sell it at 0. So that means that asset has no value. I just need to dispose of it, sell to people.
That's correct.
Yeah. So for instance, if I say 5 years linear, automatically that will compute for me. So I need to put also the account for the asset, the fixed asset account. Just pick the fixed asset account in the system, or the mteja atakwambia wanapost wapi hizo depreciations. So and then they depreciate the expense accounts. You can just pick any expense account, or you ask them what is the depreciation expense account you are using.
Okay.
And then the journal, the cash book.
What are the difference, the two? There is depreciation account and the expense account. What the difference?
Now, depreciation account, it will hold all the depreciations. Like for instance, 1,000 every year, it will hold them temporarily. Expense account, it will keep post. Ukipost elfu moja baada ya mwaka mmoja inafaa itoe ikuwe 9,000. So hiyo ni expense. Reduce from your books of account. So itapostiwa kwa expense account.
Okay.
And then the journal, most of the time we pick miscellaneous, but wakitaka kupost on an asset journal, you can just create in the journals, create an asset journal, and then select it here.
Okay.
So we save. So once we say, you click confirm, or you can also compute depreciation, so you see how the board will look like. So that's how it will look like. So after 1 year, in a depreciate until it becomes 0. 8,000, 6,000, 4,000, 2,000, and then the last year, which is 2025, it will be 0. So meaning at 2025, you can now dispose of the asset. Unaweza ita watu, weka kwa mnata, watu wa nini, whatever they do in the government offices. I know this happens very much.
Okay, I got it. Yeah. So question. I have one question, and this is very, very important. Now that they've not done anything since January, okay, so the best way is to start from bank statement. I think that would be better for them to make their life easier. Am I right? Meaning, if they take the bank statement, they will be able now to kind of check all the payments or whatever in the bank and create the statement so that they can match with if it was selling, it was price. I think that's the best way for them to make sure they have integrity data. Am I right?
Yeah, that is true. But what you need to know is if they are pending invoices from January, you need to capture them in the system.
If
there are any pending invoices from January which they want to migrate with, those invoices must be created in the system first.
Exactly. Okay. Yes.
Yeah.
Of course, before reconciliation, they have to create the invoices.
Yeah.
Either it's the vendor bill or sales bill, all they have created.
Yeah.
Right?
Yeah, that's very true. That's the first thing, and then we can come to reconciliation later. What the invoices have been captured correctly, the taxes are okay, and they are satisfied. They walk through, they see that everything is okay. Now the next thing is to reconcile those invoices, because there are some that have already been paid. You can reconcile them, and those some that are still pending, you leave them open until you get the payments. Yeah.
Okay.
So that's done. For the asset is that one. If you want to dispose, you just click dispose.
Yeah, it's okay. Asset, don't worry about that.
Yeah.
Any other area is important?
No, I think most of them have covered.
Analytic account, how customer are using?
Now, analytic account, what happens is related to project.
Okay.
So you want to track the costs in a project, how the project is performing, how much was the revenue from the project. Let's say a World Bank is financing a project in Tanzania for a company. So they pay, like climate change, they pay 10 million Tanzania shillings. And then they will want to track how these 10 million are being used. That's the
I
use
got
of
it.
analytic account. So what you
I
need to
got
do
it.
is, first of all, in projects, I think we have project here.
No, forget about that.
Oh, you
Let's go.
understand? Okay, okay.
I already understand.
Yeah.
Let's go to budgeting.
So what happens before you just go to budgeting? What happens is when you go to the invoice, when you're creating an invoice here, like customer invoice, first of all, you create the project. After creating the project, you create customer invoice from here, and then you need to activate analytic account from settings. It will come here. So you select the analytic account when you are posting the invoice.
Okay.
And then it will be posting to that analytic account. Even if you are doing an experiment, like for instance, how watu wenye walikuwa na handle climate change walinunua vitabu, photocopying papers, wakati una invoice, select that analytic account. So ukienda kwa now
Yeah.
account reporting, kuna hiyo report inaitwa analytic account, utaona vile zimeflow.
Okay. Another question we discussed to make it easier for the inventory, that we will a little bit ignore the manufacturing, in the sense that so there will be manual input of finished goods, yeah. So in the warehouse, so that they are become available for sales, and yeah, something like that. But also we can still make sure all the how do I say, all the materials, because you are purchased, the material can still go to the warehouse because they are purchased. But now I don't know how I will reduce them if I'm not doing production.
So you mean they are finished goods already available on the ground?
Yes, I'm saying we want it not to simulate the manufacturing. Okay, so you have materials which are coming, but you want, after material has been taken out of warehouse, yeah, you just want afterwards the finished good to be increased in the warehouse of finished goods. You get my point?
So what you mean is don't want to manufacture, you just want them to increase.
Exactly. You just want. I mean, at this stage, I want you to skip manufacturing. You get the point? Yes, something like that.
No, there are two scenarios here. One question you need to ask is, if this client does he have some finished goods in the store at this point here? If he has some finished goods in the store, the easiest way to do is to update inventory on hand.
Yes.
Just go to inventory. Inventory. What is that? This thing, I don't know where it has taken the icons.
Yeah, there is icon there. My worry is, okay, while you explaining, my worry is, do we simulate again the inventory movement since January, or how?
No, that would be too much work. What you need to do, the easiest way for them, let them keep them a list of the finished product and the quantities. So you just come in operations, inventory adjustment, and then you create an adjustment for them. Kwa mfano, there are 10 of them, 10 bags, just put 10 bags for this, 100 bags for this. The reason that's why you're adjusting on hand is to make them sellable. So the selling, people can continue to sell from whatever is available already in stock. So you are just, yeah.
You mean the rest of the all the transaction, they won't need a lot about the inventory, rather than the
Yeah, true, because at the end of the day, what they need to get is that the stock that is currently available on hand is captured in the system. They are able to see that we have manufactured 10 bags in the system. Then from those 10 bags, they are able to sell from them. We don't want to go back to now, let's manufacture, let's do what, that would be a long time. Just tell them when we are beginning to go live, we'll capture the finished goods, and we'll update the stock on hand for the finished goods. And then whatever you do from now to manufacture, you have to go through the normal manufacturing process in Odoo.
Okay.
Yeah.
I got it.
So it will be very easy to implement from that point of view.
I got it. Yeah.
Sawa.
I think I can.
Yeah, and then when you are training them on manufacturing, make sure, I hope previously I told you how to do the routing, the work centers. You saw what we did here. So what you need just to tell them is the issue of costing, how they can see the cost for the finished product. By just going to the manufacturing order, you can see the costing directly. That manufacturing order. Remove that. So if I open this, that is done. Always there is the cost analysis. So this is very important for them to see. Yeah.
Okay. Okay. In the configuration, did you check the configuration and see if they were correct, or you didn't get time to look at?
The configurations are okay. I didn't see anything, but I'll still walk through as a continue training before they go live. I'll walk through, and then if there's anything, I'll just advise you this one needs to change. We'll change together.
Okay. Sawa, kwa sababu I need to be sure. I mean, I know that if the formula are not correct, then everything will be bullshit.
Yeah, it's okay. I've just I walked through. It was very fine. The chart of accounts was set up correctly. The products are okay, and all that is okay. But now what you need to do when you are doing the accounting, make sure you go to the journals and ask them, is this posting correct? Because they are people who understand accounting.
Okay.
You tell them this one is being credited, this one is being debited. Is this okay according to your understanding? Alafu atakuexplainia, you take over, waambie according to the system, this is how it posts, but let me go and analyze. Then we can have a call, we analyze their data, then we can give them the rightful answer.
I see. So
Sure.
Do you have access for both database? Because we have this database. It was like you can access one, the other one you cannot access.
Oh yeah, I have access to both because they are using the same credentials. Unless they have changed. Yeah, they are using the same. So I have access to both of them.
Okay, they are working. Can you confirm to me if they are working? I mean, because I don't want to go to customer and say it doesn't work.
So I confirm and then I'll chat you on WhatsApp because I know it's 9 and I was supposed to meet some other guy.
Okay.
I can just chat you when they are okay, just immediately once I do that.
Please just do that because it's important. I don't want to be at the customer side and then I see like I'm bullshit guy.
Yeah, I'm going to just do that immediately. In like 5 minutes, I'll be done that way. I just want to rush and do something, pick some breakfast, and then come and then we'll do that.
I'm not sure. Anything else you think I should we didn't get for the?
No. I think for the process, I've touched on most of the things you need to train them, especially on accounting. For product master, make sure you just show them where you set up the revenue account and the expense account. And then also remember the valuation accounts. I didn't tell you about that. Just one second. Valuations accounts are very important for stock valuation. Where is inventory? So if you come here on product categories, for every category of product that they have, there is valuations account. This one. So you need to explain to them stock input account is for the ones that are coming from suppliers. You need to value them and post in the stock journal. And then stock output, the ones that are going out maybe to production, going out maybe to customers, you need to value them and then post in the stock journal. We have a stock journal here. It's called stock evaluation journal for it. And then stock valuation journal will get the sum. If you received 1,000, you've taken out 500, the remaining is 500. Maybe each was sold at 2 shillings. That becomes 500 by 2, it is 1,000. That 1,000 will be posted in the stock valuation account. So you also need to tell them apart from the income and the expense account. And then the other thing you need to tell them is the price difference account. This one is used for, especially for foreign currency valuations. Remember, they keep on changing here and there. You buy at this price, tomorrow it has changed because of the devaluation of the currencies. So those changes in currency from the original cost price, you post them in the price difference account. But not necessary. You just explain to them if you are importing some items. And then this is also very important, costing method. So if you want the evaluation to be real-time, meaning receive items into stock automatically in a post journals into account, make sure you select either average cost or first in, first out, FIFO. So average cost means the system inaangalianga your past purchase orders, alafu inafanya average. I received 10 of them. The prices for 1, 2, 3 was this, add the total price, add the total items, and then divide. You get the average. And then hiyo ndio itatumia ku evaluate every item quantity. Multiply by that average cost. And then first in, first out, inamaanisha ya kwamba hiyo item last ilitoka nje, price yenye ulitumia, hiyo ndio itatumia ku evaluation.
Sasa.
Yeah.
Sasa.
So most of the time when you want them to be real time, you choose either of these two. And then if you want them to be manual, standard or manual means you'll be doing evaluation manually. So you add the cost manually, and then you come and compute the total zenye umepokea ni 1,000 by the cost for each is 2, and then you get 2,000. That would be too tiresome for them to work on it. Now, if you pick manual, so once you select the type of nini, you pick automated there, and then either FIFO or average, so that it will be posting automatically. And once you do that, you pick automated, you pick any of these FIFO or average, these accounts must be set up. Otherwise, you can't do any transaction. It will always pop up an error, or stock out account is not set, stock in account will not set, and there will be so much for them. So you make sure the setup for all the product categories are okay, the accounts are set up before you pick the automated and any of the costing method apart from standard price.
Okay.
Sawa sawa, tunaweza achia hapo sasa, nikimbia nikunywe chai. Waja ni stop hii.